my why is essentially to be able to create enough consistent income streams through, real estate and other businesses to be able to conservatively leave my day job and tell my parents that they can do the same thing. And the reason for this, it goes a lot deeper than I'm going to express at the moment, on the webinar, but basically, for me, it's kind of a thank you, to my parents for like bringing up me and my younger sister, the way the things that, eh, the way that they did, and the things that they did, and just to basically be able to do the things with our lives that we choose to do and enjoy to do, rather than the things that we're obligated to do, and like having to put food on the table and work at that day job that you're not happy with. And it's something that's very, very possible. And yeah, that's a very, very big reason for me in particular, and like why I am digging into a lot of this kind of stuff and love it so much. So you might be asking, what actually is house hacking? So house hacking has been around for an extremely long time, but the word house hacking itself is actually a term that was coined by this nice, lovely gentleman with a very nice beard in the corner of the screen over there. His name's Brandon Turner. He was a big part of the company Biggerpockets. If you're not familiar with Biggerpockets, oh my God, that website is absolutely insane. It's a mostly free resource, to be able to learn about real estate investing, and it's extremely genuine. They have a couple podcasts, they have a bunch of books. A lot of investors around our kind of areas and across the country for that matter, use this platform to communicate and help each other out. And there's, different kinds of forums and everything that, if you have a question about pretty much anything, like you can just pop onto the forums, ask this question, and then somebody from like, either like Fitchburg or Ohio or something like that, pretty much anywhere in the country can actually, see this question and be able to provide their insight. And it's a website that's been extremely, extremely valuable to me. The reason that I said that it was mostly free is so I personally don't pay for it. I just have like a regular membership and it does everything that I need it to. But if you do pay for it, like there are benefits and stuff like that. And, there's a couple more things that you can do with each plan. But basically what I'm saying is like, it's not like one of those masterminds that are often marketed where like, oh, pay me 40 grand and I'll make you $1 million and, all this kind of thing. And, kind of to each their own with that kind of thing. But, Biggerpockets has been an extremely influential resource. And it's been absolutely awesome. So essentially, the gist of house hacking, very generally speaking, is it's typically, when someone purchases a multifamily property, usually it's between 2 and 4 units. And most of the time, depending on how it's structured, you have to own or occupy one of the units. And the point is to rent out the other ones. So essentially, if you buy a 2-family, like you're planning on living in one unit and renting out the other, same thing with a 3 and a 4-family. And basically what the objective is to offset your current housing expenses. So like if you're renting an apartment, say it's like, $1,100 for a 1-bedroom or something like that. If you bought like a 2 to 4 unit property, yeah, you might have to save up a bit more to be able to get there. And it actually might be easier than you think. And I'll get to that later on in the slideshow. But anyway, the objective is to basically, even if you can cut these housing expenses in half, you can also like essentially break even when it comes to, like rents coming in and everything. And basically like, live in your own property for free, or depending on how the cards go. And eventually most people are able to do this. And I'll explain, sorry. I'll explain why later on, or potentially get paid to live in your own house. Now, I promise it's 100% completely legal. It's something that tons and tons of people are doing out there. And it's extremely wild, to be able to potentially, change the course of your life and your family's life. And this oftentimes, some of the investors that are out there that have, a ton of units or, do a ton of flips or whatever the case may be, most of the folks out there actually started off with, a two family, a three family, and it's an absolutely excellent way to get started. Now, the reason that I mentioned that it was generally speaking when I explained what a house hack was earlier is because there's actually different like sub strategies to house hack. The main one is, just living in one unit and renting out the other two. But what you can also do is you can rent out by the bedroom. Now, there's completely different strategies in here. Like, instead of buying a multifamily, say you wanted to buy like a single family in a college town, like a short drive away from like, a university in the state. Say there's like 3 or 4 bedrooms, you live in one, rent out the other ones to, some of your buddies if you're in college or, students. And that works exactly the same way. So essentially, the goal of what you're trying to do is to be able to provide, very suitable housing and take care of tenants, as well as possible, which in turn, they'll be able to give you rent that's equivalent with the market value, and you're able to use that to pay your bills, and it's kind of a value exchange, like a value circle all the way around. And it's an absolutely nuts strategy. So you might be asking, why should I house hack? Why not just get a regular single family or a condo? You know, like there's a lot of different things that you can do. So house hacking, like I mentioned, is an extremely powerful tool to build wealth. Now, on average, Americans spend typically 30% of their monthly income on housing expenses. Now, when it comes to if you were to rent an apartment, right, a really popular metric that landlords use to, start to vet potential tenants that want to rent their unit is something called a rent to income ratio. Now, essentially, rule of thumb, what most people use is the rent that is expected. Your tenant has to make 3 times that rent in gross income. So basically, if your rent was $1,000, then they have to gross $3,000. And if it's higher than that, then like they might not, it might be a little bit tough to make the rents and that kind of thing. And everyone does it a little bit differently, but this is one that's extremely popular. Now, if they're under that and they actually make, say it was 3,500 instead of 3 grand, now they're able to pay that, pay those rents back, with a pretty nice cushion in there, so it's not, you're not really cutting it as close. Now, essentially, what if you could legally cut your housing expenses or even be paid to live in your own property while you're having other people paying down your mortgage and your utilities, adding equity in your property, and getting tax benefits at the same time? I would absolutely love that. And, it's definitely a direction that I want it to go, and a direction that a lot of other folks go as well. And it's something that can be extremely powerful. Now, this is something that um, I tried to simplify as much as possible. And essentially, this is what I call the spread of wealth. And basically, if you go onto Biggerpockets and go on to like, they have like a rental calculator on there, they'll show a bunch of different graphs and like, projections and stuff over time. And essentially, they'll show a couple lines on each of them. This is definitely something that I did not make up, I promise. But it's something that definitely does resonate with me and something that I really wanted to share in this presentation. So essentially, the way that this works is over time, like most of you guys know, properties, tend to go up in value. This could be a single family, a condo, a, 40-unit building, 200-unit building, whatever the case may be. Markets just go up, population growth and folks come into these cities to live and everything. It's just going to drive property values up, like different companies moving to the area. There's a lot of different factors, that can actually drive up drive up the prices of these properties. That's what I was trying to say. And as properties typically appreciate, the rents typically appreciate as well. Now, that brings me to my second line here. Essentially, you see on that axis that goes up and down, right next to that where these two lines begin and how it's this little sliver. Basically, this is basically an illustration of like, right when you buy the property and it's, maybe right where you bought it at, or like, it appraised a little higher, that kind of thing. You still have like that whole entire loan balance, or, most of it. Now, essentially, as property values tend to go up over time, loan balances will go down over time. Now, obviously, this will depend on the kind of loan that you use, but for most people, it's fixed debt, meaning like you got an interest rate locked in, you had, a certain amount down, you're going to have the same, principal payment for the next 30 years, and like the taxes and interest might change and stuff, but I'm not going to get into that quite yet. So essentially, what the goal is your tenants, using the rents that are coming in that will increase over time as the property values increase, you know, it's going to be easier and easier for your tenants' rents to be able to cover your fixed debt. And essentially, like I showed in that illustration, the gap obviously, is forecasted to open up over time. Property values, say, like a year, 5 years, 10 years, hopefully are going to be worth, a significantly higher amount than they are now. And in the meantime, like your rents are going to go up, like tenants are, going to move in and move out. Rents are going to be raised, accordingly, whatever the case may be. And that spread is just going to keep getting bigger and bigger and allow, your bills and everything to be paid that much easier. Now, that brings me to my last line, and my last line is equity. Now, that's something that's built into the property as it gains value and as the mortgage is paid off. Now, appreciation, talking again about property value, is something that can naturally drive up your equity. And basically, like when you're able to use this is like you can either refinance, once you hit certain equity percentages or, like ownership percentages with certain banks, or you could take like a home equity line of credit. And this is something that a bunch of investors use, to keep buying properties over and over, is, they'll have these investment properties or house hacks, that they're working on, like they're trying to get them, in best of a condition and everything that they can and get them stabilized. And basically, over time, like, your bills are going to get paid down, property value is going to go up, and your equity is going to be built up as well. So if you go and get an appraisal done, whether that's for like a HELOC or a refinance, they're going to pull similar comps or comparable properties that have sold in the area, and that's how they're going to kind of, base their valuation. And basically, what people do is like they have their properties and stabilize them and everything. And over time, they build all this equity. And, depending on what the case is, because like, if you're able to get an interest rate that's significantly lower, or, basically when you bought the property, if your interest rate is, decently low, and as time goes on, I mean, right now, especially like the interest rates are going a little crazy and it's happening kind of fast. But I mean, you're not going to always be able to refinance and have your payments drop, so like if the interest rate was like 2.6 when you purchased your property and now it's like 5, if you refinanced, basically like now your payment's going to be higher. I mean, there's a lot of different strategies and everything, like doing cash out refinances or basically restructuring how you're using that equity. Like if you're putting it into another deal that has a higher interest rate, then like it doesn't matter. There's a lot of different things that you can do basically. But yeah, I mean, essentially, investors will take this equity and then use that as a down payment for another property, and then like once that property appreciates and, the balances and stuff are paid down, now they have another essentially bank account to be able to take equity from again and just keep buying and buying and buying and buying. And it's something that's absolutely insane. So you might be wondering, how do I actually finance a house hack? Now, me, including a lot of other people, before really kind of digging into real estate, just kind of like a very, kind of amateur thought was like, oh, I need 20% down, like that's crazy. Like in Massachusetts, especially, you can find like $500,000 properties, no problem. And 20% of 500,000 is 100 grand. Now, there are a lot of people out there that, unfortunately, like, don't make 100 grand. I'm definitely one of them. So like, to most people, like, it might actually feel like a pretty heavy weight on their chest, if they're trying to buy a property and might not have, some of the knowledge of some of the things that I'm about to mention, and just thinking that, you can only get into a property with 20% down. And you can, but there are some other programs out there that are absolutely insane, that make the barrier to entry drastically lower. Now, it is more possible than you think to get a property. Now, there are a lot of different kinds of loans. A lot of um, loans in particular are extremely low percent down. Like, you may have heard of FHA, which is typically 3.5% down or 10% down, depending on like your credit score and stuff. And guys, I will disclose that I'm not a licensed lender. These are just things that, like, I've seen personally and everything, but I would definitely double check with a lender, because some of these guidelines and stuff change over time, and things kind of swap, and go higher, go lower, and depending on a lot of different factors. But essentially, you know, you can potentially get into a property with FHA with 3.5% down. That is insane. All of a sudden, like, kind of going from this mentality of only being able to put 20% down, and having these goals of home ownership be extremely far down the road, now just got a heck of a lot easier. And something too that Massachusetts and some of the actual towns and cities themselves offer is first time home buyer loans. And I'll dig into another very, very big benefit that some of these towns and cities actually offer as well. So one of these programs is called the MHP1. Basically, it's a 3% down conventional for single families and duplexes, and 5% down conventional for 3 families. And I believe they do 4 families as well. Now, again, I would double check on their website, because like things change and whatever. But basically, like, these are examples of first time home buyer loans. So there are a couple, bits of criteria that you have to meet, like credit score, and like, having it actually be, like the first time you're buying a property, and a couple other things. It's nothing too extravagant. And then another version is mass housing. This is 5% down conventional, another first time home buyer loan. Now, again, kind of getting into some of the criteria a little bit, with FHA, typically like the minimum credit score that's typically thrown around is 580. But again, talk to your lender. Now, there is a point here that I want to stress that absolutely blew my mind. And like, I'll be super, super happy if, like, there's folks in here that might not necessarily have heard of this, because I definitely did not, until I was having a conversation a couple of years ago. Now, along with that stigma of only being able to pay 20% down is also having 2 years of consistent income. Now, I want to tell you a little story real quick. And basically, so a couple of years ago, I was kind of confused what I wanted to do with my life. I was doing HVAC during the day. I was getting a little bit fed up with it and starting to kind of jump into entrepreneurship and real estate and investing and like all the kind of stuff that I'm into now. Now, I went to Middlesex Community College in Lowell for a year, full time, to try that avenue out, and kind of see if that's a direction that I wanted to go with my life. Now, I found out after 2 semesters, which conveniently is 1 year of full-time school, that that's not what I wanted to do anymore. So I didn't sign up for another semester. I actually went back to work at my current day job, because I actually do have a day job as well. I didn't throw it on the slide, but whatever. And I had only been at my day job for a year when I was about to have this conversation. So I figured, I was like, oh man, like 2 years of consistent income. Like, I just hit 1 year at my day job. I got to wait a whole nother year until, I can actually be eligible to even have a conversation about being pre-approved. Like, that's so far away. Like, that kind of stinks, but whatever. And I was telling this investor that I was starting to get kind of close with, and I was having a conversation with them literally over Instagram DM one night, just shooting the breeze, and, just kind of, shooting the breeze with each other, And I was telling this investor what I had going on. I'm like, man, I'm like, I, went to school for a year and didn't like it. And I also, just hit 1 year at my day job. I'm like, I gotta wait a whole nother year. And this guy was like, no, Kyle, he's like, you're ready. And I'm like, mate, I'm like, what are you talking about, man? I'm like, I'm not really understanding. He's like, you're ready. I'm like, okay. I'm like, what do you mean? And he told me basically, to check with my lender, but you might be able to count 1 full year of college along with 1 full year of working and count that as 2 years of consistent income. Now, this is something that can absolutely change a lot of things. And the next day I went to a lender and I swear to God, I got pre-approved after one single conversation. It saved me a whole entire year's worth of time because we decided to chat over Instagram one night and one little conversation. So I'm not 100% sure, again, because I'm not a lender, if you can use like 2 full years of school income, like if it's incentivized, for folks that, just got degrees and just got out of school to be able to jump into home ownership, like, kind of early. If you can use those instead, I'm not sure. But basically, I wanted to throw that little story in this slideshow because it's something that literally saved me a year's worth of time. And it's something that most people don't actually know. And it's a really, really crazy thing. And it can potentially save you a lot of time. So this is something that I know Massachusetts does it and specific towns and cities. I assume other states do it, but I can only really speak from experience in Massachusetts, and it's called down payment assistance. Now, down payment assistance, oh my goodness, this can be like absolutely crazy. So essentially what this is, some of these down payments in some of our markets in Massachusetts can be pretty big, and for some people like that, that's a lot to be able to save up, like easily, 5 figures worth of cash, to save up, along with closing costs and et cetera. So there's something called down payment assistance that essentially, you can take your down payment and they consider it a second loan. Now, there will be an interest rate on it, but essentially what this allows you to do is space out your down payment to be able to, get into that property and everything a little bit faster and just be able to pay it off over time. Now, I will stress that this is something that, you typically have to be a first-time home buyer. Most of these programs are based on like annual income caps, for certain areas. Um, and it will depend on like, which town and city and like, your status as a borrower, but it's certainly something to look into. And typically you'll have to take like one or two, first time home buyer or first time landlord classes. I actually had to take one of each for the kind of loan that I used initially that didn't end up going the way I wanted it to. And I ended up going FHA. Didn't really have a choice, but I don't know. We'll talk about it later. But basically, this is something that can absolutely change the game for a lot of people. Now, where some of these programs are actually the strongest is in cities called gateway markets. And essentially, these are certain, kind of towns and cities around the state that are trying to draw a lot more people in, to kind of revitalize the city and start to kind of, buy into more of these, kind of places, to stimulate the economy and that kind of thing, so the state and these individual towns and cities will actually incentivize buyers to come here, by making the barrier to entry lower to be able to get into some of these kind of markets. You can see up in that top screenshot on the top right, that is some of the down payment assistance programs from Mass Housing. That was one of the loans that I talked about a few minutes ago. And that was straight off of their website, like masshousing.com. Around some of the gateway cities, you may be able to be eligible for down payment assistance for 5% of a home's purchase price up to 25K. There's tons and tons of different programs. I know originally I started looking for my multifamily in Lowell, and I remember that there was two programs that I was going to try to use, like two different ones. There was one that would have been for 10 grand for, down payment assistance. And then there was going to be one that was going to be up to 5. And basically same thing, it was kind of based on like, annual income and like, the city and that kind of thing. I didn't end up buying in Lowell, but that could have been potentially 15 grand worth of, um, you know, down payment that could have been spaced out, you know what I mean? And if the numbers work, then the numbers work, and you're into the property for less and that kind of thing, especially for investors and house hacking, down payment assistance can be an absolute game changer. So this is something that I wanted to jump a little bit into. And what do super basic numbers look like? And there is something that I'm going to stress. So I had a little bit of trouble creating the slides for running the numbers because there's a couple different ways that you can run a house hack. Now, I structured this webinar in particular just around house hacking. I'm sure I'll do another one in the future about actually buying multifamily rentals. But essentially, depending on how you run the numbers, you know, when it comes to house hacking, like you're counting on, one of those units being vacant and having like the other one or two or three bringing you in rents. Now, if you ran numbers just as a house hack and put them into like the Biggerpockets calculator or like a spreadsheet or something, then you're, missing out on one of those incomes. And that's huge. So, like you hit the calculate button and all of a sudden your cash on cash returns is extremely negative and like it looks like an absolutely horrible deal. So I structured it just around like the debt and kind of the principle of house hacking, and kind of comparing it to renting a little bit rather than, trying to dig into kind of like, some of the nitty gritty numbers and that kind of thing. So typically what most people do is just run numbers as a rental and kind of what it would look like by then, because most investors use house hacking and take advantage of these low down payment loans to actually get rental properties for super, super cheap. And I'll dig into it in, I think next couple slides, if I remember. But basically, like if you use FHA or like certain types of loan products, you only have to actually own or occupy or, live in that unit for a year. And then if you wanted to, like you could go buy another one or you could, move back to another house or, whatever the case may be. And now you have a full out rental with the unit that you were previously living in, now being able to bring in, an additional rent, which is absolutely huge. You know what I mean? Like, um, but yeah. So essentially what I'm going to do in the next slide is just kind of show the principle of house hacking. I decided to use my specific property's debt and like, what my mortgage is, along with the rental income that's coming in, just to kind of keep the concept a little bit more clear. I have a couple more slides in there about, the plans and what I'm trying to do and kind of what the numbers would look like, if those were able to come to fruition. So we'll see. So one thing that I will stress as well is when it comes to real estate investing, especially house hacking, it's not just your revenue or like your potential rents that are coming in, less your mortgage, and that's it. And all of a sudden, oh, I'm making $1,000 a month. This is awesome. They call that ghost cash flow because there's a lot more expenses that go into it besides the actual fixed debt. So like utilities is a big one. Um, expenses are like funds that you could call it, to keep your property sustainable, like accounting for potential vacancy in the future, rate repairs, maintenance, capital expenditures, and that kind of thing. But yeah, so essentially, my friends, this is what my actual house hack numbers look like right now in terms of just my core debt. Now, my monthly rental income coming in, like I said, I have a 3-family. I inherited both of my tenants with, inherited leases until later on this year. So I haven't been able to alter them, but each of them are bringing in $1,200 a piece. So now the monthly income that I have been receiving is $2,400. Now, my core mortgage or principal, interest, taxes, and insurance adds up to $2,770 every month. Now, this is with a 30-year fixed FHA loan at 2.6%. That's, kind of what I locked in at. And then I included snow removal as well. I've kind of paid through the nose a little bit for snow removal. But my neighbor right behind me actually was, extremely generous. And, because we have like basically like a shared parking lot, like a shared driveway. So we basically took that total expense from, all of those storms in December, January, February, March, and fingers crossed, I'm hoping that's it for the season. And basically we took all of those expenses and cut them in half. So I stayed super conservative. Essentially, the total amount that we paid for snow removal was $1,200. I technically only paid 600, but I threw 100 up there just to kind of stay conservative. Now, if you subtract the revenue coming in minus 2870, so 2770 plus 100, that's essentially, how much that I'm paying out of pocket just on the debt portion. So as of right now, at the moment, without raising any rents or, any additional really crazy expenses or snowstorms, knock on wood, I'm currently paying $470 a month out of pocket to own and live in an 8-bedroom, 4,300 square foot property in North Leominster. Now, I included the fair market rents from HUD in the top right-hand corner of the screen. A one-bedroom to the fair market rent to rent a 1-bedroom apartment in Leominster is $870. And this is half of that. Now, this is something that literally anybody can do. And this is why it gets me so excited. I'm hoping that this is pretty much the bottom of the barrel, in terms, because, like I haven't been able to increase rents, and like, rents have increased like, at least a little bit since I bought the property, and same with property values. So eventually those numbers are going to go up, and like the leases are going to end, and, we'll kind of see where we're at and kind of, what moves to make when it comes to, increasing rents. And this number should drop more and more the more that you increase the rents. Now, like I kind of alluded to a little bit earlier, your taxes will go up in the town. That's just a given. So technically that will go up a little bit. And your insurance, that probably will go up a little bit too over time. But essentially, right now, I'm kind of hoping that, this is the very bottom of this. And, this is the majority of what I'll actually be paying for the debt out of my pocket, to live in this property. So outside of utilities and, repairs, CapEx, vacancy, like that kind of thing. Now, what one of my plans is, and this is something to kind of, an example to kind of show you that you can mix strategies, is I have to fix a couple bedrooms in my unit, and I would pick my laptop up and kind of, swap it around because it's actually right in this room. But essentially, when you walk up the stairs to my unit, there's 3 bedrooms in there, which is awesome. But you have to walk through each of these bedrooms to get to the next one. And like back in the day, that's something that probably flew pretty good. And like everybody was cool with that, maybe throw up like a curtain or something. Oh, excuse me, I'm sorry. Ouch. Maybe throw up like a curtain or something like that, in between the walls. Like if there's a family living in there, the kids are in one room, like that kind of thing. But for the purpose that I'm trying to, achieve with this property, and especially this strategy that I'm about to tell you about, it's not going to fly like that. So essentially what I'm trying to do is figure out how to essentially add like a hallway in here and swap where the doorways are. So essentially you can isolate one bedroom from the next, and you're not going to walk through one to get to the next one. Instead, you just go down the hallway, pop open a door, and you're in the room, close the door, like you're all, doing your thing. And then same thing with the next bedroom and the next bedroom. And what I'm essentially trying to do right now is to find contractors to come out here to give me quotes for that, and kind of see, what that would look like. But essentially, I ran a couple numbers, very, very conservative on what it would look like to have one roommate in here. And that would instantly take the debt out of my name, which is a huge goal as soon as possible. Now, the drawback with this is, that if you decide to get roommates, you will have to learn to live with other people. There's a whole nother, kind of set of circumstances with that, and like, finding the right tenants and, people that you're actually going to be living with. But people do it all the time. And it's something that if you can kind of sacrifice, having the comfort of living in just your own property and having 1 or 2 or 3 other people in there, it can absolutely, change your returns like instantly. So the number that I picked for the rent, like just this, kind of like a pie in the sky number, was $700 for a room for Leominster. Now, a one bedroom itself rents for $871. I dropped it down to 700. I got to do more research on this, the more that I actually kind of make progress on this. Um, but essentially what I'm trying to do is there's a college that's literally about 10 minutes away from me and in the town next door that I would love to get, a couple students from there and, be able to give them, like private parking and everything and like, have a nice upkept unit. Just to be able to live together, like I have, Wi-Fi and stuff like that, and just kind of give them a nice place to live, like while they're going to school and doing their thing. Um, and also, being able to, make more revenue on the property and, that minus my expenses will instantly, if I could get at least 700, which I think is very, very conservative, but like I said, I have more research to do. Um, to flip the script on like actually paying out of my pocket instead to actually be paid. So all of the debt is out of my name. And now like that $230 a month could go towards, just keeping it in the bank account with the property and building that up a little bit. So, over time, like things are going to happen. Or you could put this towards another property or, put it towards like a business or like utilities. Basically, like now all of a sudden, to be able to make a little bit more money in your property at the sacrifice of having to live with someone else like very closely, can pay off big time. Now, getting one would be absolutely phenomenal, but if I could get two, I would be a very, very happy camper. um, all of a sudden, like you can make almost like $1,000 a month, uh, just from having, two more people living in your house. And that's completely after the debt is covered. That's something that can be absolutely crazy, especially if you do this for, a year or like a summer or, like a term or something like that. Like if it's a college rental, even like a couple years, you know what I mean? Like if you put this money away or put it into another asset, like the tables can turn like crazy. So that's something that I just kind of wanted to explain, in terms of what some of the numbers actually can potentially look like for house hacking a property, the very, very, very basics of it, along with potentially mixing strategies, like a student rental, along with, renting out your other units, if you have extra bedrooms and that kind of thing. The sky is the limit. Now, one thing I mentioned it a little bit earlier that FHA in particular has as a benefit is basically this really crazy you know principle that allows people to keep buying properties over and over again with some of these low down payment loans. Now, you only have to live in the property for 1 year from your closing date, and then essentially you have a choice. Now, legally, that is actually like a contingency with your mortgage that you have to fulfill in FHA. Like you have to like agree, that you're gonna live there. And if you don't live there and like rent out your unit and they find out about it, that's actually mortgage fraud and you can go to prison for it. And I'm sure none of us are trying to do that. That is a form of a house hack. Your expenses are cut, but definitely wouldn't recommend that one. Returns are too small. um, but basically, after this year is up and there's different circumstances, like if you have to relocate or, like there's a 100-mile rule, quote unquote. Again, this is something that I would talk directly to your loan officer about, or, your lender, and have that conversation with them and see, kind of the different intricacies because things change all the time and actually, what it says in black and white on paper, of some of the different things that you can do. Now, so say, you just bought like a duplex, a year just passed, you're happy as a clam, your other tenant is absolutely phenomenal. Maybe you have a roommate in there, you guys are best buddies and, have beers on Friday nights and everybody's happy. You have a choice now. So you could, just keep living in that property and doing your thing. You can also potentially refinance that FHA loan into conventional. And now you're able to use that FHA loan again. So another stigma that people often think is that FHA is just a first-time homebuyer loan, and I assure you it is not. But typically, you know, what the case is most of the time is that you can only have one of these loans out at a time. Now, like I said, there are different situations on a case-by-case basis, how, you might be able to get two of these, and like, if they're like 100 miles apart from each other, like there's some, different way to do it that way. But yeah, that's something that I would definitely talk to your lender about. But, all this sounds fine and dandy and everything, but I don't want to manage tenants. Now, I assure you that it's not as bad as it sounds. But I will tell you that not everything is going to be sunshines and rainbows all the time. And once in a while, there are going to be times where things are going to be difficult. But as long as you don't give up, things aren't going to be negative permanently. Now, the classic, oh, fixing toilets at 2 a.m. You know what the solution is for that? Having a plumber on deck, before you buy a property that's ready to go. Or, having a couple people in your market, like other investors that you can ask. Or, if you if you refinance the property, moves out, and now it's just a rental. Now, if you wanted to, you could have a property management company take care of that. So like they call your property manager, they get the plumber out there, take care of it. You don't lose an ounce of sleep. Now, managing bad tenants, that's something that, especially in Massachusetts, can be extremely difficult because we are an extremely tenant-friendly state, which has its pros and cons. I'm not really going to get into that in this webinar, but when it comes to, doing like formal evictions and everything, it can definitely be difficult. There are a lot of investors that have personally gone through that. And it can be a very, very expensive, time consuming, and headache filled process. And a lot of people, that might just be a turnoff for them. But the thing is like, that might happen. But once you get that person out of there, or, if one of your tenants, just decides to move on to bigger and better things, or say they want to buy a house, or, rent somewhere else closer to their new job, or whatever the case is, now you have an open unit to fill. Now, this can be an absolutely phenomenal thing, or it can be an absolutely horrible thing, depending on how you treat the situation. Now, vetting new tenants is absolutely, absolutely, absolutely crucial to having success as a real estate investor, especially when you're self-managing your properties. Now, you need to do a very, very good job screening the people that are going to be living in your house. And there's a lot of different techniques, you know, that go into that. There are some things that you can do and some things that are illegal to do, and, can technically be considered discriminatory, based on income. And there are, protected classes in Massachusetts and everything. So you need to do a good job, but you also need to make sure that you're abiding by, every single law that there is out there, from like fair housing and that kind of thing. But basically, like one of the things that, like I was talking about earlier, that most landlords talk about, or, use to initially vet tenants, is that rent to income ratio, like the gross income being at least 3 times the monthly rent that's coming in. So that's a very, very big one. Like credit score, that's another big one. Running like a background check. A bunch of those kind of things are very popular methods to screen tenants. But it is extremely important to be able to do that. Now, this brings me to my next bullet. You need to have the mentality that unfortunate things are going to happen once in a while. And I feel like, and the way that, I've started to kind of establish this kind of mentality is I've been kicked around a little bit with my own property. I ended up 2 weeks after I closed, I found 2 oil tanks that started leaking in my basement that I totally didn't expect. And I had completely other, plans for it. I was going to convert to gas because it's in the street and yada, yada, yada. So that was like $5,000, which was actually a good price. I had a blower motor in my furnace go. That was another $500. And then I shortly after, one of my, the contractor that I was using for everything told me that there was a crack in the heat exchanger in my furnace that served my unit. Now, essentially what that means, super basically, is that the flue gases, or basically the exhaust from like the fire burning, just like there is in your oven or like a water heater or something, that was mixing with the air, like that was being warmed up, that was being dispersed throughout the space. Now, I will stress that that sounds extremely bad, and I was nervous for a little bit, I will be honest. But it wasn't enough to actually set off the brand new CO and smoke detectors in my unit. But it was definitely still something that was, that came up. And all this was completely unexpected. I ended up using mass save, to be able to spread out that furnace, and I'll, talk about that at a later date. But basically that would have been like $12,000 that was completely unexpected 2 weeks after buying the property. Now, that's definitely getting slapped around a little bit, like right off the bat. But basically, as soon as some of these things happen, because in a way, as much as you're signing up for, creating this absolutely unbelievable potential for building wealth, for you and your family, and eventually building, potentially this big empire, and prospering, and building companies and the freedom, you're also agreeing to take on the problems and issues that come with it. Now, this is something that's very important, is because the faster that you're able to accept that problems will happen and you will need to deal with them, the better off you're going to be. So things will break, tenants will give you a hard time, or, you'll have to do an eviction. You'll have to solve all sorts of problems, because I mean, at the end of the day, you're buying a house. Like sometimes, like things will leak in the basement, or, you know, like you'll need to get like, you know, things, I'm trying to think. I don't know, like just things are gonna chip and break, and like you'll have to repaint, and like you actually have to take care of this property, kind of like you're a building manager, and things are gonna go wrong, and yeah, they're gonna cost money, but if you're able to extract the lessons from some of these things going wrong, to one, be able to build a system. I mean, even if it's just mentally, like just having the experience of going through this, but also starting to build some of those mental calluses that, yeah, things are going to go wrong, and all the investors out there don't have stories of, everything just being 100% great all the time. Things happen. And I feel like the more that you go through some of these situations, just like life in general, like the more calloused, your mentality and your mindset is going to be, so like things are going to come up, and you'll be like, oh, all right, that sucks. But, the last time that this happened, or the last time that I heard this happen to someone else, you know, a thing that I could have did to prevent that was, to have a plumber on deck, like before I bought the property, or like, basically just have that like go-to kind of person, like if a pipe bursts or something like that, like, yeah, like that's a huge deal, but I mean, if you have a plumber and like, a wet dry vac, like you can start to get started, you know what I mean? And that's very, very generally speaking. And that was kind of just the first example I thought of. Or like, if you had like a drain or something, leak in your basement, yeah, I mean, it's gonna happen. Like like I said, you're signing up for the problems as much as you're signing up for the rewards. And if you can get through the problems, man, like you are gonna be all set. Um, One thing to stress too is to remember that your tenants are people too, and they should be, respected. Like they're like, without your tenants, you literally have no business. You just have a very expensive mortgage payment to pay. um, and these guys should be as taken care of as possible. You know what I mean? Like you're trying to provide an equivalent value exchange between, getting consistent rents from these folks, and giving them, you know, equivalent value, and taking care of them as much as possible, and making sure they're okay and everything. And the value of the relationship and the dynamic between getting consistent payments from the tenant and higher dollar amounts can be interesting, which I don't know, for the people who are on Biggerpockets, I wrote a blog post about this a couple of days ago. Basically, in my opinion, at the point that I'm at, after having like this property for a few months, is there is a dynamic between, you know, so like say your lease is going to end, well, your tenant's leases are going to end pretty soon, right? And your rents are, drastically, well, not drastically, say they're like, pretty lower than what they could be at market value. Now, basically what all of us want as investors is to be able to get, the highest rent that we can, fair market, like nothing absolutely ludicrous, that could get you in trouble or anything. But we also, have to have these relationships with our tenants, and have things be going all right. And like, basically have the tenants be able to keep sustainably, paying those rents that are coming in. You know what I mean? And if you all of a sudden hit them with like a $300 or a $400 hike, in 1 month, as soon as the lease ends, that might be a little bit much and kind of tarnish the relationship a little bit. And stemming back to what I said like 10 minutes ago, in Massachusetts, it can be very, very difficult to remove a tenant that, isn't happy, put it that way. um, but basically, to sum up all of this, you always have to have that long-term vision in mind. And if it was easy, everybody out there would do it and everybody would be rich. And I don't even know what that would do to the dollar. That's way too much thinking. But basically, if you're able to get through the shortcomings that will happen, it's not a matter of if some of these things are going to happen and some of these things are going to break over time. It's a matter of when. So if you kind of adopt that mentality of things are going to happen and you just, have to be able to account for them as much as you can. And also when these things do happen, whether things are going extremely well or things aren't going so hot, to be able to extract every single lesson you can from everything that's going on. I'll add one more very, very quick detail in here before I move on to the next slide. So there is a property manager who I've gotten pretty close with over probably the past year at this point. And I was talking to him right after I bought my first property. He was actually based in Leominster. And he was telling me, he's like, Kyle, he's like, now that you got your first property, he's like, you want to write down every single thing that happens. He's like, because you're beginning day one of creating the processes for the rest of your investing career. And that's something that's really always stuck with me, is like, if you can start to build up systems, the more systems that you're able to build, the less things are going to impact you and the farther away you can kind of be, and, kind of have these investments in the background, with not a lot of time on your back. I mean, it's not going to be, most likely, it's not going to be an 100% passive investment like a lot of people paint out there. If you have a property manager that's absolutely phenomenal, that's great. They're going to deal with a lot of the problems, but you also now adopt the role of having to manage your property manager, and check in and make sure everything's going all right, and still keep tabs. You're not necessarily going to be able to step away 100%, and just see rents coming into your bank account. But if anyone does, please let me know. Now, you might be wondering where I can find a multifamily property. Now, there are a bunch of these in Massachusetts and a bunch of these across the United States. So there are some of these markets that are a lot more, rent heavy, I guess you could say, like the amount of multifamilies is going to be significantly higher than other towns. Now, some of the big ones can be like Lowell, Worcester, Leominster, Fitchburg, Gardner, Lawrence, Springfield. There's an absolute bunch of these. But one thing that's extremely interesting is one thing that I learned relatively recently is that there are, in some of the towns that you wouldn't think of as having multifamilies, and just be kind of dominant in like the amount of single families and stuff that hold up, that cover a lot of the land in that market. Once in a while, there are some stragglers, 2, 3, 4 families. One of my past clients, actually, they were looking for a house hack, and we found a duplex in a town that I definitely wouldn't think of having a lot of multis, but it's something that ended up working out extremely well. And it just kind of opened up my mind, of like, a lot of investors typically think of like, some of those multifamily, extremely multifamily heavy markets, like Lowell and all of those markets. But some of these smaller towns, I mean, even like I grew up in Tewksbury, like even like there have been a couple stragglers in Tewksbury, and I only ever saw, single families and commercials, restaurants and stores and that kind of thing. There are properties out there and like literally all over the place. And it's something that's absolutely crazy. One thing that I will stress too, that is a bit obvious, but I'll talk about it anyway, is a lot of these markets that are very multifamily heavy, the price points are going to be drastically different from one to the next. So in Boston, obviously getting like a three family for like, $1 million is, might be a little bit pie in the sky, depending on the situation and everything, of course. But if you look for the same three family in like Fitchburg or Leominster or Worcester is actually starting to kind of get up there too, in terms of purchase price and appreciation. That market is absolutely blown up and it's really crazy. um, but yeah, I mean, basically, like, if you're not able to buy a 2 to 4 unit, based on your pre-approval and risk tolerance and being close to work and the values that are important to you in some of these markets, you might be able to go to different markets and get drastically different price points that fit a lot better, So one thing that I have found too, more on the agent side, is that the farther west you go and the farther away from Boston, the cheaper on average the purchase prices tend to be. I mean, it just kind of makes sense. Boston has all like the, hustle and bustle and like, a lot of these markets that are extremely close, are over time going to start to absorb some of those values. And like especially with prices continuously going up, like it seems like every single day at this point, it's going to push people farther and farther out of these cities, because they're not going to be able to afford them as easily. And if you still work there, like if you work in Boston, you might not be able to afford like a 2 or a 3 family anymore, that you were able to maybe like 5 or 10 years ago. So now, maybe your only choice is to move back to like Waltham or Framingham or, like Lowell, Marlborough, some of these kind of cities out there. And then over time, those markets are going to get very expensive. And like it just organically, it just seems like, people kind of gravitate out west and the purchase prices increase, more starting to go out west as well. And it's something that's extremely interesting. But regardless, there are a ton of multifamilies all over the place. The first step to Househack. Now, there is a lot that I threw in here, and don't be intimidated. This is the exact process that I use to, from absolutely day one of just kind of finding out about real estate all the way to essentially where I am now. And this isn't like an exact process, like people are going to do different things in different steps, and you should. And some of these things you should never actually technically complete. I mean, in my opinion, if you want to keep buying properties and, doing flips and that kind of thing. But I'll just run through it super, super fast. So essentially, consuming as much real estate content as possible is absolutely crucial starting off. And it's a very comforting place for a lot of people because you can control the rate at which you learn about some of these kind of things. And the great thing about, having the learning in your control is like a lot of these resources are free as well. So like the Biggerpockets podcast, like, or even, like I said, Biggerpockets in general, if no one if there's, anyone out there that hasn't checked it out, I would definitely recommend starting there first and just kind of, pick through the website and, you know, kind of look at some of the conversations that are being had. Go on YouTube. There's a million bajillion YouTube videos about this kind of stuff. They call it YouTube University. If you don't know how to do something, hop on YouTube. It's probably there. um, reading books is another big one. There's a million bajillion books out there about real estate investing and house hacking in particular. There's a couple really, really good ones that I actually talk about a little bit. And the last one is going to meetups. So this one can be a little bit intimidating for a lot of people. And for me, it was very intimidating for a while. Now it's pretty scary. You know what I mean? Like, you're just some guy or gal, getting into this real estate thing. You think it's extremely cool because it is extremely cool. And now, going to one of these meetups where there are like a ton of these events, you might have some of those self-limiting beliefs in your mind, like, oh, no one's going to want to talk to me. Like, I'm just beginning. Like, all these guys are like, super rich and like nobody's going to want to bother with me. what I have found from personal experience is 99.99999% of the time, that's not the case. Now, most of the people in the real estate space, or the real estate investing space, I should say, are extremely willing to help people out and just not expect anything in return. Because this stuff, like, we're trying to change each other's lives. You know what I mean? Like, this goes so much deeper than just buying property. Like, this is like, buying property, creating income, being able to quit that day job that you hate, with everything. And, Sunday nights are the worst because you got to wake up on Monday morning and that kind of thing. And be able to actually maybe, like, who knows, maybe work a part-time job doing something you really like and like the pay doesn't even matter. Or, you could just go absolutely full out into real estate and keep buying properties or start that business you want to. You can go and see your kids like baseball games and stuff on like a Monday night or something, or on the weekends. Like, some people do overtime or whatever on the weekends. If you have income coming in that's very significant, that you've gotten over time from real estate, especially house hacking, you might not necessarily have to work that day job anymore, and like it's going to be different for everyone, but these are just some of the things that are possible. You know what I mean? And it's unreal. Like, you can literally control your entire life, and not, like, you won't be kind of like, chained to a desk, quote unquote, to that job that you might not like, or, having a commute like an hour and a half each way. Like, it can absolutely change your life and your family's lives too, for a lot of different reasons. So essentially going to meetups, you know, basically just try and talk to everybody that you can meet and just be completely upfront and tell people, like, kind of where you're at. Like, oh, hey, my name's Joe Schmo, and, like, I just kind of learned about house hacking, and, I wanted to come to one of these events to start to meet some people and, hear a couple of guest speakers and have some fun, and I just, wanted to hear your story. And literally, like, so many people want to help you, like, it's not even funny. Like, like, my tail wags, like, figuratively, like, if people come up to me and are like, hey, I just found out about this real estate thing. I think it's super cool. How do I get started? And, like, just show them a couple resources and teach them some of the things that because one thing that I will stress, and I talked about it a little bit earlier, is that one single sentence from one single conversation with one single person can completely change your life. And it has happened to me quite a few times at this point now. And literally anybody can do this at all. Like I was mentioning earlier, the having that one conversation over Instagram DM, with that investor saved me a year's worth of time like that. I got a pre-approval instantly the next day, and, like, that's just the tip of the iceberg. Like, some of these things, like, if you wanted to buy like a two family, I had a conversation with someone probably like 6 months ago that didn't think anything of it. And they told me, they're like, oh, actually, ask your lender to be pre-approved for a 3 or a 4 unit and see what happens, because you might be able to jack up your pre-approval and be able to get more leverage from the bank, because there's additional rents coming in that are included within your debt to income, which is one of the metrics that they use, or that the lender uses to figure out, how much money to lend you and, like, what's a risk for them and, like, the interest rates and that kind of thing. That absolutely changed everything. Now, all of a sudden, you go from looking for a duplex to a 3 or a 4 unit, and, like, pair some down payment assistance with that. Ugh. Literally, like, but basically, the more people that you talk to, the more of these conversations that you're going to have, and your gears are going to be turning all the freaking time. And the sky is the absolute limit, and most people want to help you. Branching right off of that, something that I found extremely important was to create social media accounts, or if you have those social media accounts, put yourself out there. Just tell people, like, oh, hey, I'm Joe Schmo. Like, I'm starting to get into real estate. Like, I think this stuff is super cool. Or, like, repost, some of these posts from, like, Biggerpockets, or, like, if you're even, like, just trying to get into, like, a start a business or like a landscaping company or something, like, figure out who the players are, start to learn about it. and just put everything you have on the table, and just bet on yourself and just put what you have out there. Because something that can and very much will happen from time to time is there will be people that reach out to you after you put yourself out there about some of these things that you want to get into that are into the same exact thing. And literally, like, it absolutely can blow your mind. Like, people who you would never ever expect, because a lot of people don't put themselves out there. And if you're the one that's able to, put everything you have out there and be like, all right, this is what I got, you know, like, it can absolutely change everything, and one thing that I will stress is basically, you know, people might laugh at you for posting some of this stuff. Some of your buddies be like, yeah, man, like, you're crazy, like, no way. But, and this might be discouraging for a little while, but one thing that I realized is people will laugh at some of the things that you're getting into until they don't. Now, if you bet on yourself and you really, really care about some of the things that, and these are some of the things that you're passionate about, you really want to hit the ground running on, it doesn't matter what they think, like, people will laugh until they won't. So put everything you have on the table. Think about it like that last scene at 8 Mile with Eminem, where he says, like, oh, like, I do live in a trailer with my mom. Like, Papa Doc had nothing to say and he choked the battle. In a way, that's something that can be compared directly into, jumping into a business or entrepreneurship and stuff for the first time, is people will laugh at you and, like, want you to choke the battle like he did against, I forget if it was Lickety Split or the other guy, but whatever. Um, you know, and the more that you keep jumping on the mic or, like, keep posting the stuff out there that you're into and, like, giving value and that kind of thing, people are gonna like stop laughing at you. And all of a sudden, like, you've made all these steps and everything, and, like, your life could totally change, like, very easily, so, like, just go hard on yourself, and, like, it doesn't matter what other people are thinking. um right off of that, one thing that I very, very highly much, recommend people doing is just connecting with literally every single investor in your market that you can find, and just reach out, send them a direct message. I do it all the time, through Facebook, Biggerpockets, Instagram, LinkedIn. Um, and basically, like, just same exact thing that you would do at a meetup, like, sorry. Um, excuse me. Basically, put everything that you have out there, be like, oh, hey, I'm Joe Schmo. I'm starting to get into this kind of stuff. I saw that you were in you were a real estate investor in Worcester, like, I'd love to hear your story, like, would you mind if we connected over a phone call? That's something that I've done often, very, very often. And the relationships that it creates can be absolutely golden and life changing. And something too is you want these conversations to be extremely genuine. Like, you don't want to be, like, just trying to mooch off of people. Like, this has to be real, like, completely real stuff that you're putting out there. Like, you know, people can smell the BS from a mile away. You know what I mean? Like, you don't want to be that guy that's just trying to mooch off of people and get all this information. No. Basically, in real estate investing, something that I've found is it's a very, heartwarming and extremely helpful atmosphere. And the mentality that the vast majority of very successful people have is just having that mentality of helping each other out. And it doesn't matter, if you're looking for 2 to 4 units in Lowell on the same street, like, help the guy out. You know what I mean? Like, it's, like, we're all trying to build these very crazy aspirations together. There's enough pieces of the pie for everybody. It's not like there's just, oh, there's only a certain amount of houses, in the city, and, like, these people have three and I can't have one. It's not at all like that, you know? So just reach out to as many people as you can, hear their stories, and just keep finding more people. Keep going to meetups, just keep talking to people, you know? The next step after this that I took personally was to chat with a loan officer and get pre-approved. Even if you're ridiculously early in the process, one thing that you can do is to reach out to a loan officer and find out what you have to do to get pre-approved. Just give them your information and that kind of thing. and they could tell you to like build up your credit score or like save more money, for reserves, like lower your debt to income ratio, like, lower your expenses, pay some bills, that kind of thing. So at least you have an insight of where you're at on, a very specific level when it comes to getting like a pre-approval. Like you can either get one right now, or you might not be able to right now because, the bank isn't as comfortable with where you're at financially, but they will tell you directly the things that you have to do to be able to be pre-approved and, for them to be a-okay with giving you, a few $100,000 or more, and it's extremely important. So you finally have that conversation and you get that pre-approval. Now you can decide your investing strategy and your criteria. Now, in this case, this webinar was based on house hacking. So it could be like, looking for 2 to 4 unit properties in Worcester County under 500,000, say your pre-approval is like 600,000 or something, so now, or, maybe with like a little bit of work in like specific, parts of the city and that kind of thing. The more specific and granular that you can get without getting so specific that you have no properties that come up to look at that fit that exact description, the better off that you're going to be. Because if you're looking at like single families and multis, you're going to be looking at way too much information. It's going to be extremely overwhelming and discouraging. And if possible, you want to limit it down to as small of a criteria as possible to just say like, all right, just 2 to 4 units, Worcester County, under 500,000, I'm okay with doing a little bit of work, that kind of thing. Once you can kind of start to nail down some of your strategies, Biggerpockets has a calculator for running, rental properties, and you can run deals, as well as a Househack and everything, and Airbnbs and flips and whatever you kind of do. You can use a Excel spreadsheet, if you're into that kind of thing. Now, basically the gist of this is to just start practicing, running numbers on these properties. Because the better that you can get at it, and the more fast and fluent that you'll be able to go through this stuff, the better off that you're going to be. Now, after you start to kind of, analyze some deals and just kind of get a feel for like analyzing properties and running through numbers and everything and becoming comfortable, I highly recommend looking for an agent at this point, and one who works with multifamily properties and investors in particular. There are a lot of them out there. Candor is essentially, built around the, investment properties and kind of tailoring more towards like the multifamily sector. Shameless plug there, but just throwing it out there. But yeah, I mean, if you're able to go to your agent and be like, all right, man, this is what my criteria looks like. I'm already comfortable with running numbers. Let's set up an MLS search criteria, or, I'm pre-approved. Let's set up a MLS search criteria, start to get some properties that start to flood your inbox and you can start to pick through and run numbers on. And the goal is to essentially, as you start to get these emails, you start to find properties and do some numbers and that kind of thing. You reach out to your agent to have a showing, be it an open house or a group showing or like a private showing with just you and your agent. And basically you start to, walk through some of these properties. And your agent's going to be teaching you about, certain things in the basement to watch out for. And like, why is this layout a little strange in terms of functionality? And, why this parking situation's a little whacked out. How would this look like if you were renting this out to, a bigger family or something like that? Like, could you fit like 3 cars in here if there's only 2, on-street spots for the property? And just a lot of those things that a lot of you don't really know until you actually start walking through some of these properties. The next step right after that is to start to write offers on properties that you like. You've walked these things, ran numbers, you're comfortable, maybe see a little bit of value add, like a little bit of extra space here and there and that kind of thing. And essentially, you write an offer on it. Well, your agent writes an offer on your behalf, based on what you're looking for, sends it over to the listing agent, and eventually you're going to get an offer accepted. Especially in this kind of market right now, it's a very, very seller heavy market. So getting an offer accepted is a little bit tougher now than it was maybe like year, 2 years ago, something like that. But eventually, like if you keep putting offers in on properties that you would actually, really want to live in, the eventually you're going to get one accepted. It's just going to happen eventually. The stars are going to align and everything's going to be all right. Now, as soon as you get an offer accepted, you kind of begin the process of actually going through the transaction. They commonly refer to it as getting a deal locked up when it's under contract, because now essentially, you're not competing with every other buyer that's looking at that same property that also put an offer in. You have this thing, it's just you and the seller, and now it's up to you, your seller, your listing agents, the attorneys, if they're involved. That's most likely going to be the case. To mutually agree on a price that this property is going to be traded at, with whatever terms and inspection contingencies and or results from your inspection that come up and getting seller credits here and there and that kind of thing. And now, eventually, you'll have you may or may not have your inspection contingency after you put it under contract, depending on how you write it, your risk tolerance and that kind of thing. But let's say that you do. So as soon as you get an offer accepted, you get 7 to 10 days for an inspection period. And then right after that is when you should be signing your purchase and sale. Now, this becomes the official agreement for the property, and your original offer doesn't mean jack anymore. It's easy for goozy. And, essentially after P&S, you have your appraisal that's in there. In the meantime, there's a bunch of, bank underwriting and stuff that's going on. There's a lot that's going on behind the scenes. And then, 30 days after P&S is when you should close. Now, this can get delayed for a lot of different reasons and that kind of thing. And I could actually do another webinar on, what does a traditional real estate transaction look like? If that's something that you guys might be interested in, let me know. That one could be kind of fun. But anyway, so eventually you get through your first transaction, you sign on the dotted line, and your house hacking or real estate journey has begun. Now, like I was saying before, these steps aren't necessarily going to go 100% in the same exact order for everyone. This is just the order that just kind of happened for me. A couple things that I typically never actually am finished with doing, you don't actually complete these steps even after you buy your first property, is putting everything you have out there, telling people what you do, connecting with as many people as you can, and always learning. What else? Always running deals and stuff like that, running numbers, always connecting with other agents, other investors, lenders, just other people, you know what I mean? To build your team, kind of give each other value, always walking properties. Even if you're not necessarily in the market to buy a property, basically, there are a lot of things that you can learn, especially in basements, especially from some of these multis that are built in 1900. Well, maybe like late 1800, some of them, but typically some of these older multis are kind of structured in a different style. Oh, cool. Awesome. Thank you so much, Nassif. I appreciate the response, my friend. But yeah, and writing offers too. If you're looking for more properties and everything, you're always going to be writing offers all the time, on different deals that come up, whether they're on market, whether they're off market, whatever the case may be. So those are some of the things that you never really actually complete doing. You just, kind of always do them in the background while you're, building up your empire. Next slide. So some of the helpful resources, and I can create a Word doc or something like that and email it, or a Google Drive or something with some of these resources. So some of the resources in here that are extremely beneficial, especially for buying your first house hack or your first property in general, is the first one being updated fair market. Excuse me. Updated fair market rents from HUD. That's that screenshot in the top right, just to kind of get a gauge on what HUD, the actual organization, determines for the market rents. Now, one thing that I have realized is, you know, these are going to differ significantly based on a lot of different factors in terms of when you're going to rent a unit out. Like, some people might be able to get a couple $100 more, couple $100 less, depending on like, how updated is the unit, like, how many, like what's included in the rent. So like those numbers are a good average to go off of. But like another place that you could look is like Facebook Marketplace, to see like what people are trying to list units at, like to rent. Like, some of them will be like apartments for rent, units for rent, that type of thing. You can't see actually, sold apartments, I'm pretty sure. But what you could do is go to an agent and they could actually pull rentals that were put on the market and see how much, the asking price was and how much that they got it for as well, like to sign tenants on and everything. Um, Rentals aren't always going to be done on the MLS, depending on like who the investor is and that kind of thing. But that's another way that you can actually tell, some of what's going on. Another thing is the Section 8 rent roster. That one is pretty interesting. Um, yeah, I mean that's a different pretty much like a different roster, for like some of the more affordable housing programs and stuff out there. That's always another good one to look at. The Massachusetts lead paint database, that one I live and swear by on, the investor and the agent side especially. So essentially how this works is, in a perfect world, every single property and every single unit in Massachusetts would be on this database, because essentially if lead paint has ever been tested in your property, there's a very, very strict guideline for these lead inspectors to have the status um of that lead test on that website, like all documented. Somebody told me it was within like 24 hours or something like that, like something absolutely crazy, because lead paint is an absolutely enormous deal in general, but especially in Massachusetts. Like whether you're renting a 1-bedroom apartment or you're buying like a 300 unit building or something like that, you know, the status of lead paint is extremely important, and that's something that it could do a whole nother have a whole nother talk on. Um, but basically, you can look up and see, you can try looking up, maybe like a property that you're trying to buy, even though, if you look on the MLS, even if it's off market as well, um, there needs to be lead paint forms that are signed either way, or disclosures, to tell you what the heck is going on. Is there active lead paint? Is there not? Like where are we with this? And what you can do is actually, type in your actual property or a property that you're trying to buy on that website and see if anything comes up. Now, if nothing pops up, that's a couple of different things that can happen. So one of them, if it's a multifamily, it could be technically a different house number. So if it's like, 123 Main Street, maybe it's like 122 or like 124. That could be a reason. Another reason is that there's never been lead paint testing done at that property, like ever, which I'll get into it, another time, kind of some of like the more intricacies of lead paint. But yeah, this is another phenomenal resource, and it's something that's extremely serious in Massachusetts. Um, Massachusetts mediation services. This is something that I learned about from a landlord association meeting I went to a while back, for Worcester County. And essentially what this is, if you're having problems with one of your tenants, or your tenants are having problems with each other, what if it's noise or, whatever the case may be, before taking any crazy action on it, there is, people out there, this is a volunteer organization. So there are people that, like this is free basically to give to your tenants, or, call yourself and try and fix, like a dispute or whatever the case may be with a mediator. So essentially it's, in a way, it's kind of like a therapist, like a free therapist, but for, like, like more like business, like matters, like relationship matters and like that type of thing. And it's completely free. And I'm 99% sure that both people have to agree to that. So like the landlord has to agree and the tenant has to agree as well. So this is something that I learned relatively recently. is that you could try this out. Like if you're having problems with one of your tenants or whatever the case is, before going right to a notice to quit, which is the start to an eviction process, and try and handle it this way first. If anyone has kind of worked with them before, I'd love to kind of have a conversation about it, and kind of hear your experience. But anyway, so some of the phenomenal books and podcasts and stuff that I was talking about earlier to get you started, that top book right in the middle up there is called The Househacking Strategy by Craig Curelop. He is an absolutely awesome author, investor. He wrote a really, really awesome book on house hacking. He's with Biggerpockets. One of the books down the bottom, sorry, just gonna drag that bar out of the way. I got a bunch of bars right there. Is the book on rental property investing by Brandon Turner. This one is absolutely classic, and this one is absolutely phenomenal for people who are just jumping into house hacking and that kind of thing. And the last book on the bottom left right there is another absolutely awesome book. It's called The Millionaire Real Estate Investor. And this book is, in my opinion, it's absolutely great if you're just starting off and if you're trying to start a legit business, buying properties and structure and everything like that. And like everything that you would need is essentially in that book. It's absolutely awesome. That guy, Gary Keller, that wrote that one actually has written a bunch of books as well. I'm gonna get this bar out of the way. So my friends, that concludes the the little presentation today. I wanted to open it up for any questions, comments, concerns, anything at all. Feel free to just unmute your mic or anything. I'd love to chat. And Miranda, thank you very much. Have a good night. I appreciate you coming by. But yeah, anybody that's got any questions, feel free to fire them off or put them in the chat. We can talk about it and that kind of thing. And yeah, I'm gonna take a break and have some quick coffee real quick and a little bit of water.
Hey man, I just want to say thanks for putting all this on. I appreciate it. I learned a lot tonight, so thank you.
Thank you so much, Kyle. It means a lot, man. Thank you so much. It means a lot that you have picked up maybe a thing or two. Yeah. Thank you so much.
If you got a minute, I was kind of interested in how you found your property down in Leominster. Like, was it like off market, on market, MLS? Like, were you looking for a while? Like how that kind of planned out for you.
Sure. So funny enough, man, it's actually a little bit of everything that you just said. So I originally started really looking in like January, February of 2020. I think it was September of 2020. That's what it was. And I initially started looking in Lowell because I grew up in Tewksbury. Found an off-market deal over there that I actually put under contract, like just from, shooting the breeze with somebody, and it didn't work for like the numbers that he wanted. So I, he just gave the lead to me, because this is, such a fun, like heartwarming business, to just help people out that are trying to succeed. So he passed this gentleman along to me, and it was a 2-family in Lowell. I really liked it. The inspection came back fantastic. The price was absolutely fantastic. The only issue was it was me working directly with the seller, and the seller, without going into too much detail, was very, very difficult. And this would have been my first transaction ever. So yeah, there's basically there was quite a bit in there. And a lot of things that if I went through the same exact situation now, I would have handled it a lot differently and probably continued to buy that property and figured it out later. But you live and learn, you know what I mean? So basically, that one ended up falling through because it was a duplex. It was on a corner lot. There was a decent amount of on-street parking and a couple driveways. Like, absolutely loved it, right? But the issue is it was a very strange layout for a duplex. Like, the units were right on top of each other. And it was technically considered a duplex on paper, but the owner was renting it out by the bedroom. which don't get me wrong, I absolutely love that idea. And UMass Lowell isn't far from, where this gentleman's house was.
Yep.
And absolutely awesome idea. But the issue is Massachusetts actually has a limit on how many people in one property, or I want to say I'm not sure if it's by the unit or by the property. I want to say it's by the property, but anyway, they have a limit on how many people you can actually rent by the room to before it's technically considered a rooming house or like a boarding house. And the thing that's interesting there, and for Massachusetts, it says it right on mass.gov, you can have up to 3 unrelated people living in the same property, paying like living by the bedroom. But as soon as you have a 4th person, now it's technically illegal and it's technically considered a rooming house. So this guy, he had, I believe it was 4 or 5 kids in there. And I didn't know it at the time. This is when I first started to learn about this, was going through this. And basically, my attorney and my loan officer were trying to figure out like how to get this to work. They're like, dude, this technically like isn't legal. They're like, you'd have to put up like a bunch more money to get like a different kind of financing to make this work. And I'm like, yeah, I can't do it. I'm like, it's too much money. I'm like, it's a phenomenal property, whatever. I picked up a lot, just spent the money for an inspection, and that's it. Learned a bunch throughout the whole thing. So basically I kept looking. A couple months later, I found out, about potentially buying a 3 or a 4 unit, and the extra rental income from the extra tenants being added in with your income when you go to buy a bigger property like that, and getting a much higher pre-approval and more leverage from the bank to be able to, like, they're comfortable giving you more money because there's a lot more money coming into the property that can pay off that debt service or mortgage, basically. So I got a drastically higher pre-approval after kind of going through that process a little bit. And I ended up putting one under contract in Lowell. It was a huge triple-decker building on a corner lot. It had like an 8-car driveway. It was like 9 bedrooms. They were enormous. Absolutely fell in love with it. But the issue is when I went to have my inspection, the building was literally falling apart from the inside out. And it was from like the very, very early 1900s. And there was a lot of structural damage. And after it fell through with me putting it under contract, it never went under contract again. And I actually, an investor that I actually got to know a little bit in the area, he ended up buying it like, it might have been like a year after I put it under contract, like off the market for like a bunch of money off. So I'm excited to kind of see how the project goes. But basically, I mean, what that led to, because that was at a much higher price point because I was able to, so I was taking on a lot more leverage because they were able to give it to me. And I found out pretty quick that that was a horrible idea. And you have to be very, very careful. Just because the bank wants to give you a bunch of money, especially if you're buying a 3 or a 4 unit, that doesn't mean that you should use the whole thing by any means. So basically, I really fell in love with that, 3 or 4 unit style. So I'm like, oh, well, where can I get a 3 or a 4 unit property for, a much lower price on average than Lowell? And it started to, like I was talking about earlier, kind of push me out west a little bit. And like I looked in Worcester for a while, I looked in Leominster. I'm trying to think of where else. Marlboro. I don't think I went to Air. Clinton, I was at a couple. I started to look all around, and then I kind of found this one in Leominster and was able to put this one under contract. And it was a very, very rough transaction. But like I was talking about earlier, when it comes to expecting problems and stuff like that, and like having certain situations happen to you, the more that you learn, and you build the calluses in your mind, and it's like, oh, all right, like that kind of sucks, but next time it's not going to be as bad.
Oh yeah, next time around, it's a piece of cake.
Exactly, man. And that's kind of it. But yeah, I mean, that I was looking for a while, had a couple deals fall through, and then the third one ended up being the charm, and I've learned a lot since.
It's fun.
But yeah.
Nice. Well, hey, congratulations, man. I mean, you work hard, so you deserve it.
Thank you so much, man. It means a lot.
Well, I'm gonna take off, but I'll definitely have to link up with you soon. We'll do something like that again. So I appreciate it.
100%. No, thank you so much for coming, Kyle. It means a lot.
All right, have a good night, my man.
All right, you too.